Good morning, everybody. This is the live market open for October 13th. Today is Tuesday, and markets are back from vacations in the United States, Canada, and Japan. I'm Yohay Elam of Forex Crunch and Market Movers, doing the morning show for FX REIT. We have quite a few things today to talk about. As usual, we'll tackle recent developments in markets, data, and news. Go over charts and levels, examine the next 24 hours, what we're expecting, and most importantly, expecting your questions in the chat box. I already see a few people already here. Okay, so let's look at the recent developments. We had Australian business confidence that was a bit overshadowed by what we had just after that. Chinese trade balance, okay, that was a big event as we worried yesterday and also last week. China is not doing too well. So let's look at the figures and see why we're worried. It's not the headline figure, but rather the imports and the exports. Let's take a look at what's going on today, okay? So the most important figure is this one. Imports, they dropped in yuan terms, in Chinese yuan terms, by 17.7%, worse than an already big drop of 15% that was expected, or 13.8% seen last month. In US dollar terms, it was a fall of over 20%. Okay, year over year. Less imports mean, of course, for Australia, less imports of copper, of iron, and for the rest of the world, it's also a warning signal. Okay, also exports fell by 1.1% year over year. It was better than expected, so China exported more, or exported less, but not as bad as expected. Anyway, these are not good figures. We've already seen the Australian dollar pressured to the downside and sort of worries all over the world. Because if China is doing less for the global economy, and it has been such an engine of growth so far, it's not good news. So let's take a look at the Australian dollar. We've seen it rise very nicely last week, rise above this post-Fed top of 72.70, and then almost reached 74. Now it's lower. Okay, so the fall didn't begin with the Chinese data, but let's say it makes it harder for the Australian dollar to recover, and it pressures it down. Okay, so that's a big development. It also has implications on other currencies. For example, dollar yen, a safe haven. The yen is a safe haven, so it's trading a bit lower because there's more demand for safe haven currencies such as the yen. Still around the 120 level, but still but a bit lower within this range. We're seeing it fall in the past few hours. And also euro dollar. Euro is new to the safe haven camp, but still important. We've seen it top 114. The high so far has been 114.10, and this is of course also because the euro is a safe haven currency. And when we're talking about the safe haven currency, the trouble that pushes money into these safe havens can come from home as well. Okay, so we had data coming out of Germany earlier today, and it showed falls in prices. Okay, so the HACP, the CPI, the headline inflation numbers were not that surprising, but they were still negative, confirming the negative figures seen last time. And also WPI, wholesale price index right here, which was released only for the first time. It wasn't a revision. It was also negative, as you can see, a drop of 0.6 month over month, or 1.8 year over year. And this implies deflation, slowing economy, less activity, which is, of course, bad. It can imply more action from the ECB, which would be euro negative, but at the moment, it implies it just joins the sort of disappointing, the bad atmosphere. Okay, and so speaking of the dollar, of course, we had more developments. We had speakers from the Federal Reserve in the United States, quite a few of them. Some of them repeated previous comments, like Evans. I want to focus on two. First of all, Lockhart, which is, as we mentioned yesterday, sort of moving to the hawkish, belongs more to the hawkish side, but a bit in the center. He's of the Atlanta Fed, so he sees a rate hike quite viable in October or December. But on the other hand, Lael Brainard, who doesn't speak too much about monetary policy, she has a permanent voting role on the FOMC, the Federal Open Market Committee, but we don't hear from her much. So she had a bigger impact because she, clearly joined the dovish camp. She does not want to raise rates anytime soon. She's worried, very worried about the global economy, and that sort of added to the negative atmosphere together with the Chinese data. Okay, so now we're seeing sort of this negative atmosphere, which means a stronger euro and a stronger yen and weaker commodity currencies. So we talked about the Aussie dollar here, that is losing after gaining so much in the previous week. The Canadian dollar CAD reached 1.29, sort of bottomed out here. You can see some kind of double bottom on the hourly chart, and then now it tops 130 once again. Critical line to watch for dollar CAD is right here, would be more exact, around 130.70, which capped it last week after it first dipped under 130. Jumped back up, and 130.70 was the peak. And we saw it drop to 129 and then rise again. Let's see if it can pass 130.70. So far, it isn't going that fast. Another commodity currencies that is sort of off the boil, off the highs, is the Kiwi dollar, that we've seen it rise to 67.40 almost. Now it's down under 67 cents. Once again, level to watch is 66, and well below that 65.30. Anyway, we've seen the Kiwi dollar lose from the highs, and I skipped on the pound. So we had some good news for the pound. We had a big deal in the beer world. So let me see if I can say this correctly. Anheuser-Busch InBev buys SAB Miller. So maybe these are not household names, but I'm sure you've heard of beers like Budweiser, Miller, Grolsch. Which others do we have here? Anyway, if this deal is approved, it'll form a company that controls a third of the global beer market. It's a huge deal for corporates. And why am I talking about this in the context of Forex? Because SAB Miller is a multinational, South African, British, but most importantly, it's British, and it implies flow of funds from the United States and Europe to the UK. So what we've seen is the pound rising quite nicely on this deal. Okay, so this is the move right here. This jump, it was on the news. This deal was in the making already for a month or so. Each time Anheuser-Busch InBev offered a higher price. At the end, it closed at $44 a share, or $68 billion. That's a lot of money. Of course, we still have much more impact from speculation about interest rates, from QE, from economic data than true movements of money, like this huge deal. But today we're seeing it in action. Okay, so we had still not reaching the 154 level, but certainly rising in range thanks to this beer deal, if you want. The pound is cheering this deal. Okay, so these are sort of the main headlines. This morning, yesterday, we had vacations, as I said, the United States, Canada, and Japan. Now everybody's back to business, so we might see much more action. Let's see what's expecting us today. So there's no rest for the wicked pound. We have inflation data coming out of the UK quite soon at 8:30 GMT. That's in around 20 minutes. So we have lots of figures. Let's point out the most important one. That's the consumer price index on a year-over-year basis. No, that's not this one. It's this one. Okay. So this is the picture of inflation in the UK. Easy to see that we had sort of normal inflation for quite a few years, even high inflation around 4%, above 4%, 4.5%, and then it fell quite sharply. Of course, one of the reasons is the fall in oil prices. But anyway, that's the Bank of England has a target of 2%, okay, or it has to be in a range between 1 and 3%. And if it isn't that way, the governor of the Bank of England has to explain to the Chancellor of the Exchequer why it's like this. Clearly, it's oil prices, but there are doubts creeping into the Bank of England that it's not only that. Because, first of all, with headline inflation remaining so low for so long, we also have an impact on core inflation. Core inflation right here also dropped quite sharply. Okay, so it's also not. Also here we had it's still in positive ground. It's not in deflationary territory, but it's at 1.1%, and 1% expected to rise to 1.1%. Again, it's not the target of the Bank of England, but it's important to remember that it isn't too far from the levels seen in the Eurozone. So the Bank of England is also a bit worried about that. Now, when we talked last week about the glass half empty, we talked about these figures. When we talked about the glass half full, it's wage data. Tomorrow we have employment figures in the United Kingdom. Jobless claims, unemployment rate, and most importantly, wages. And wages are rising quite nicely. So maybe tomorrow will be expectations for positive data will be higher in the UK. Okay. Now, so we'll follow this event, of course. We're expecting, this is the headline figure, 0%. We also have the retail price index, RPI, and purchasing, the producers price index, PPI, lots and lots of figures. It can be quite confusing. We'll focus on, first of all, on CPI and then on core CPI and see how the pound reacts. Well, it's beginning into a race because of this bad mood in markets. I think we're beginning to race all these beer-related figures, beer-related rises. So we've been all the way to 153.87, and now we're back down. See if I can find some kind of headline, but I think it's just the bad mood. So as we're seeing the yen and the euro strengthening and commodity currencies suffering. Okay. Later on, just after the show, we have German Zoo Economic Index, and we have it's expected to fall from 12 to 6 points, but we can maybe see even a worse figure because I'm not sure markets are pricing in or economists are pricing in the full extent of the Volkswagen crisis and what it does for the mood in Germany and German businesses. It's a business survey, not a consumer survey. So we might see it fall to negative. Another component of this figure is the current situation. It's expected to remain on high ground, only fall from 67.5 to 64.7. And we can see a contrast, maybe worries about the future, while the current situation is okay. That can be blamed on Volkswagen. Okay. Question from Pan. Good morning. What did you make of China news this morning, please? Especially odd and Kiwi. Well, I mentioned this at the beginning of the show. It was bad figures, especially the imports. They fell for 11 consecutive months, and less imports, of course, in China mean less exports from Australia and New Zealand. Okay, so we've seen both currencies pressured to the downside, losing from their highs. 70 to 80 is the level to watch in Aussie dollar. That was the post-Fed high, and above it 73.60, but more like 74, and the Kiwi dollar, which is sort of a bit more stable, under 67. 67 remains resistance. 66 is support. Okay, let's talk about other events that we have today. At 10:30 GMT, we have Ian McCafferty, the hawk on the Bank of England, talking. Let's see if he's still supporting a rate hike. Probably is. Only a week has passed before the previous rate decision, the last rate decision, but who knows? He might change his mind. It'll be interesting to hear if he supports a rate hike. That would not have any impact, but if he's a bit more worried, of course, it will have. So, of course, changes make the difference. And let's see just what we have tomorrow morning. Okay, we have Chinese inflation data and the height of the night. We're expecting negative figures from PPI and still positive from CPI. See if we have it right here. Let's hit the button here tomorrow. That's the FX rate calendar on Forex Crunch. So we're expecting PPI, Producer Price Index, to remain very negative at a drop of 5.9%, but the Consumer Price Index, well, also to slide, but from 2 to 1.8%. So these are sort of the figures we're watching for tomorrow. We'll cover that, of course, tomorrow morning. Let's see. You're welcome, Pan. Your questions, everybody, of course, very welcome. Let's mention. Let's go back to euro dollar. I don't know how many of you have mentioned this very, very critical line right here. I think I've mentioned it in previous shows. 114.60. Now that we're trading above 114, it's time to look at the next level. And this is the next one. This thick black line here, 114.60. It has a few symbolic meanings, okay? First of all, it's 1,000 pips above the lows seen in the spring, right here. These lows, 104.60, when everybody was talking about parity, when the ECB began implementing the QE program and implemented it very successfully. Okay, so it's 1,000 pips higher. Then when the euro changed direction, moved higher, the peak here was 114.60, 1,000 pips above. Then, of course, we had this range trading, the Chinese crisis right here, which sent it shooting all the way up to 117, but it quickly fell down. And then after the Fed, we had this second challenge of 114.60. So now at 114.04, we're just sort of 55 pips away. That's critical resistance. Let's see if we'll have a bounce or break, or if we won't reach this level at all. On the downside, it's still 113.75, even though it's been shattered a bit, and more significant support at 111 that we've seen around 2 weeks ago. Okay, let's talk about a few crosses, a few other currencies. Let's start with dollar Swiss, leaning lower in range now that we're seeing the US dollar continue to suffer. It suffers now more against the euro. The euro and Swiss trade very much in tandem, so we're seeing the pair slide lower. 95.20 is more support, 96.60 is weak resistance, and 98.40 is high resistance. We've seen this big fall here. That's Fed related in mid-September, but we're very far from that. Euro Swiss, very stable. This is the daily chart. We've seen action in the past, but in recent weeks, it's very, very stable. 109.30 almost every day. The limits are 110 and 108.70. Euro pound. Euro pound is on the move. So, okay, with the rise of the euro and despite the big beer deal, we're seeing a break higher in euro pound. Let's look at the next levels here. This happened just in the last hour or so. So, of course, just under the very round level of 75, we have 74.80. And then right above that, we have, maybe the deal was called off or something. 76. Anyway, let's move back to the hourly chart. And you can see this is just fresh from the last 10 minutes or so, because we're seeing the pound slide back down, and we're seeing euro continue to hold its ground more or less, struggling still with 114, but on the rise. And pound dollar is back down under 153 already. Let's see if I can capture any kind of headline for you. So let's see, but it might be expectations towards the big release of inflation data. No, I'm trying to look for headlines. I can't see anything. I haven't seen. I think it's the regular pre-release speculation in the UK. It's not uncommon in the UK to have leaks. we might have a weak inflation figure, maybe a drop in prices year over year. Good morning, Paul. Thanks for your question. You have a question of euro against the Swedish krona. Euro SEK intraday moves. In your opinion, this is a currency pair I haven't covered, but let's take a look and see the euros against the Swedish krona right here. Oh, that's quite a nice move, isn't it? And that's the hourly chart. So we've seen euro against this Swedish krona, say franc. Let's look at the bigger picture. Well, first, let's draw one line here. We had it fall under the previous support line, and resistance we had it, let's say here, or around this range of 930, 932, and 925 is support. So these are the levels. I think. Why is the Swedish krona rising today? So euro is sliding against Swedish krona while the euro is rising. So, well, maybe I haven't seen any news from Sweden, so I find it. I don't have a good answer for you. I'm sorry. The bigger picture is that the Riksbank, the Swedish National Bank, did cut rates in the past quite a few times. So that's why in the longer term we've seen since the past few years the Swedish krona slide. Anyway, let's put a few more levels right here. Let's just look at the levels to watch. I have no idea about news from Sweden. I'm sorry. 917 is the next line of support. Very strong. It has been a triple bottom earlier in the year, and the even more critical support is 905. Okay, resistance. I will put it right here at. Sorry, right here, 940. Okay. So the Swedish krona is strengthening today against the euro. And these are this is the hourly chart. Quite a strong move, and this is while the euro is strengthening. So Swedish inflation data. Okay, thank you very much. So thanks, Paul. Well, I must say I just don't follow Swedish krona. Let's look. We have from today. Yes, you're absolutely right, Paul. We're seeing Swedish inflation rise month over month 0.4%. I don't have here expectations, but after falling 0.2% last month, it's of course good news. Good news. I mean, positive news for the Swedish krona. And year over year, we've turned positive. So let's look at the chart. I don't have a chart here. Sorry. So the year over year change was a fall of 0.2 last month, and now 0.1. So you said it. It explains this strong move. The figure was released just 15 minutes ago. Okay, but we'll follow this tomorrow as well. See if this move is really sustained, or if if there's a real change in the Swedish krona or not. Okay, more questions. We have from Pan mentioning a possible bull squeeze. You're talking about euro pound that we've mentioned earlier, or the pound. Jake, good morning, asks us traders, what's our best bet today? Our best bet today, that's a good question. I think best bet, the currency to watch is euro. I mean, first of all, we have the British pound here. Let's see if this isn't an exaggerated move, and let's see the inflation data that we'll have in just 7 minutes. Okay. And then we'll have the release of the ZU economic indicator from Germany, and I think it could go. My bet is that it'll be worse than expected, and this could imply some kind of slide in the euro on expectations for more monetary easing, but it's a bit hard to gauge at this moment. Okay. So these are sort of the best bets. Another one is assuming we have weak inflation data from the UK, and then we have a speech by Ian McCafferty. It'll be interesting to hear if he responds to it negatively. But if we have inflation figures as expected, or even better than expected, and we see the pound bouncing back up, then of course we don't expect any significant moves. So the best bet today, I would say that if we have bad inflation figures, we'll know that soon. Then trying to watch what Ian McCafferty says. Pan asks about the Aussie. Well, yeah, as we have the Aussie pressured down because of the Chinese bad data, the imports missed, of course. We have it sliding lower, bad mood in markets, good for the euro, good for the yen. As we speak, even the yen is extending its gains. That means dollar yen is falling even further. On the hourly chart, it looks a bit dramatic, but lest we forget, it's just 34 pips away from the 120 level. This is, of course, bad mood markets is good for the euro, now a bit under 114, but still on the highs. So, and the bad market mood is, of course, bad for commodity currencies. So if we have stocks falling in the United States, for example, later on today, we might have the Aussie extend its falls, just slipped under 73 as we speak. And this might be an interesting one to watch as well. I would say that in the US session later today, the Canadian dollar is a bit more active than the Australian dollar. So, and the Australian dollar is more active in the Asian session. This is a relatively straightforward thing that I think we can see most days. Bad mood in markets, the Canadian dollar also is falling. USD CAD is rising. Let's see if the 130.70 level is is moving. I'm in short, so hoping long. Laugh out loud. Pan, you can watch the Chinese figures. That's very late at night, 1:30 GMT. That's 3:30 here in Europe, or 2:30 in the UK. But that'll be, of course, an important figure to watch. Regarding Aussie, let's see if we have another more figures from Australia that can rock the boat. We have that's 11:30 GMT. Westpac consumer confidence for October. It's fresh figures. It's quite important, but very choppy, as you can see here in the chart. So last time it fell by 5.6%. If we have another fall, it might sort of add to the pressure and support your short pan. But if not, I mean, this is quite volatile, so I'm not sure we'll have 2 consecutive falls. Let's see further on tomorrow, things that can impact the Australian dollar. Sorry, tomorrow, of course, the Chinese figures, we mentioned that before. No, nothing more of importance from Australia. But in any case, have interesting developments over there. So we have 2 more minutes until the release of inflation data in the UK. The pound is extending its falls, 152.85. Do you guys have any more questions? Any charts you want me to cover? I'll jump pound related. Pound against the yen. Again, bad mood in markets, weaker pound, stronger yen. Yen is a safe haven currency. Pound is just another currency. We have a big fall here. Well, actually, yeah, we have over 100 pips in the last hour or so. 184.35 there as resistance. I thought maybe we could have, on better mood in markets that we had last week, we could reach this very strong 186 level right here. We haven't seen that. We're seeing the pair fall. Support, as I see, is at 182.50 and sort of in 50-point increments to the downside. Yeah, Jake, 1 minute to go. Let's see and refocus on the. Just take another look at euro pound, shooting higher, weaker pound across the board, 74.50, and let's look at this one, pound dollar. around 30 seconds to go. You should note that there's some kind of delay between the time that I speak and the time that you hear me. We have the data out. So it's a drop of 0.1% in CPI year over year. Also month over month is down 0.1%. And let's look at the half-hour chart. We're seeing immediately even more losses for pound dollar. So this is a 30-minute chart. Quite a fall, 152.70. So it seems like sell the rumor, extend the sell on the fact. It's quite negative. Let's look at other figures. The low so far is at 152.66. Let's see if we can have the buy the rumor, sell the factor. In this case, a negative figure. Let's look at other wider figures to see what's going on in the UK. So, yeah, headline month over month misses with 0.1. Retail price index misses RPI with 0.8 year over year instead of 1%. Producer price index is a bit higher than expected, 0.6. Most important thing, the consumer price consumer price index falls year over year, 0.1%. That's a disappointment. And also core prices, which were expected to rise from 1% year over year to 1.1, are actually unchanged at 1%. Let's see if we have another figure of importance here. Also, the house price index is down. Well, prices are still rising of UK housing, but it's 5.2 instead of 5.5 expected. And producer price index, retail price index month over month is down 0.1. The most important figures are down. So is the pound. We have sell the rumor, sell the fact. Quite a big fall below the level seen yesterday. Quite dramatic. So all these gains related to the beer deal seem to be erased. Deflation is striking the UK once again. The global economy is going down, doom and gloom, or well, it's sort of what markets probably feel right now. The markets tend to exaggerate. So we have quite a reaction in the pound. We've seen it trade this morning in a range of 130 pips or more. We're seeing similar reactions. Let's see. Also, euro pound extending its gains, the pound losing even more to the euro, getting quite close to the 75 level we mentioned before. Haven't seen that in quite a while. So euro pound is at the highest level since this peak here in July. So it's in May. So we're at a 5-month high for euro pound and pound yen. Quite a fall today. We've seen a few days of nice gains and boom, we're all the way down. Still within the range, but erasing all the previous gains. Pound dollar on the bigger chart. Are we seeing another losing streak? So we had these 9 days of falls in August, then 8 out of 9 days here falls in September, and now we had it climb back up and then trade in range. Now we're seeing it slide back down once again. So it's quite exciting. So we've had pound cheering the beer deal and now falling on inflation. That might explain also why the Bank of England was relatively pessimistic last week, why they saw the glass half empty. So maybe they had these figures in advance or feared that inflation would be this low. Okay. So it's now we're seeing the dollar strengthen against other currencies as well. So that was quite dramatic. So as I mentioned just a few minutes before the release, I said if inflation figures will be low, we'll have to watch the speech of Ian McCafferty. Why? He's a hawk. Let's see if he reacts. If he says these are bad inflation figures and hints that he's not really supportive of raising rates anymore, that would be, of course, negative. Even more, it could hit the pound even further beyond the current levels. But if he says that, if he still sees the glass half full, rising wages in the UK, markets will probably ignore it because he's known as a hawk, as someone who wants to raise rates. Okay, so it's quite a dramatic day so far. Maybe some traders came back with a lot of energy as well from vacations, long weekends. Anyway, that's what's going on in the pound. Let's look at what's going on in the euro. Also there, we're seeing dollar strengthening once again. So, well, as I mentioned, the euro is a noob to the safe haven world. Now we're seeing it fall all the way some 30 something pips in the past half an hour or so, back to this line that was important resistance in the past, now shattered 113.75. So that's we're seeing the US dollar strengthen. Actually, the yen strengthening more than any other currency, followed by the dollar and the past movements. This is for you, Pan. We're seeing Aussie extended its losses. Okay. So euro dollar moves back down. Also here in less than 30 minutes, we're expecting the zoo economic sentiment. Joshua, good morning. Joshua asks, what do you think of euro dollar? Yeah, that's exactly what I was going to talk about. So I think we've seen safe haven flows because of the Chinese data pushing the euro up, but now perhaps there are worries that Europe could go the same path as China as well, perhaps. With the bad zoo figure, 114.60 is really critical. As I mentioned before, support 113.40, that's very weak support. 112.90 is more important support. And 112.50 is another line of support that we've talked about last week. All in all, let's show you Joshua and the others and the other chart. We did have a very nice breakout of the triangle on Friday. We had this triangle, this wedge formed back on the Chinese crisis, the Fed decision here, and then after the NFP here, we had a few attempts to break higher, and finally we had a move higher that seemed quite decisive. But if we don't have 114.60, this critical line right here, broken anytime soon, I don't think we'll have. I think we could see more downside. I still think that the ECB could react negatively to the weakening figures in the eurozone. It's the zoo sentiment, it's inflation figures like we had earlier this morning from Germany, and it's also other figures from PMIs that we have next week. For example, next week we have the ECB decision. Speaking of next week, speaking of the future, sorry, let's look a bit at what we have later this week. So today we talked about Chinese trade balance, UK inflation, and German zoo indicator. And tomorrow we have the Chinese CPI we mentioned, the UK employment data, wages are important. US retail sales, a lot of the US economy is consumer related. On Thursday for UPAN and for others trading the interesting Australian dollar, we have employment data. Let's see how much Australia is disconnected or not from China. And we have US inflation figures, CPI. The Fed has not been confident about inflation. And let's see if they have good reasons to be worried. Bigger themes in markets. I think these are things you know. The never-ending question, to hike or not to hike, and when, of the Federal Reserve. Currently, economists still expect a rate hike in December. 65% of economists expect a rate hike in December, but we're talking about something like 65% chance of no hike in December, according to bond markets. Okay, let's just quickly show you this this tool right here. These are the expectations for October, 92%, no change. December, 63%, no change. January, still 54%, no change. And only in March, we have a high chance for a rate hike, according to bond markets. The implied probability, we have sort of 60% of seeing rates higher at higher levels than we currently have. So this is what markets are pricing in. If we listen to Brainard, I think we're expecting it only in June, September, December 2016, or in other words, the future. You're most welcome, Joshua. Joshua thanks me for the detailed explanation. Okay, so I think it's time to wrap up for this morning. Let's begin from the beginning. This is the wrap up of the live market open for Tuesday, October 13th. But we're seeing lots of action in markets. The recent developments are Chinese trade balance came out worse than expected, especially imports dropped for the 11th consecutive month. A drop of 17% in yuan terms or 20% in US dollar terms. That has weighed on the Aussie and darkened mood in markets. Aussie dollar slipping below 73, losing the highs 72.80, 72.77 is the critical level to watch for the Australian dollar. In Germany, we had weak inflation figures as well. CPI was confirmed at low levels, and the WPI, the wholesale price index, came out at disappointing levels. We're expecting later the ZOO economic indicator that is expected to be positive, but because of Volkswagen, it could be negative. Euro dollar made a nice move today above 114, up to 114.10, but fell back down again. Critical resistance at 114.60, support at 113.75, more importantly, perhaps 112.90. Bigger story today is the British pound. So this is a rise and a fall. The rise is related to a big deal in the beer market. Anheuser-Busch InBev is going to buy SAB Miller. SAB Miller is based in the UK. This is supportive of the British pound. So we had this rise up here, up to 153.87, but then falling all the way down because inflation data missed. Most importantly, CPI dropped 0.1% year over year. So that's the big disappointing news. It's important to note that, as in many cases, the move began before the release. Okay, so now we fell to 152.51. Let's see what's expecting us ahead. We have Ian McCafferty speaking in around 2 hours' time, and it'll be very interesting to watch if you react to these figures and it becomes less hawkish or not. What else do we have on our agenda today? For the wrap, we have, these are the main events: inflation, German, and McCafferty. At night, we have Chinese inflation data for those of you trading the Australian dollar and the Westpac consumer sentiment. And let's also take a look at other currencies and see what's going on. Risk aversion mood, dark mood, safe haven flows. This supports the yen, which is at the bottom of the range, very narrow range, around 120. Continues hugging this level for many days. It's a bit frustrating, but we know that afterwards we might see an explosion. Dollar CAD, Canadian dollar was weaker. We had this double bottom at 129 and now it's higher. Australian dollar under 73, Kiwi dollar under 67. Less appetite for risk, less appetite for commodity currencies, more appetite for safe haven flows. The euro, the yen, and in part the US dollar. The big questions remain: to hike or not to hike. We have we have more Fed speak this week. We have more stuff later from the US economy and the retail sales, inflation, things like that. So I think we can have quite a few interesting movements later on. this week, we're already seeing traders come back from the vacation and move markets quite a lot. So I think that's all for today. Thank you very much, everybody, for coming, for asking questions. Keep the questions coming. It's we're here to talk, have the community participate as every morning. We'll be here also tomorrow at 8 GMT, as always, covering previous events, looking forward, covering charts. Thank you for, we'll look at the Swedish krona as well to see if this move is sustained. And well, so I guess that's it for today. Thank you very much, everybody, and safe trading. Goodbye.